All right, listen up, you broke motherfuckers. I know what you do. I know you get on Zillow and you start searching for $1 million homes when you have like $87 in your bank account. That's okay, because guess what? This video is for you, because I want to talk about down payment assistance. I know I mention this a lot, but this is honestly my bread and butter, and it's something that I really like to show people that it's possible. So I'm going to show you a fantastic program that is available in every single city, county in the state of Arizona. So if you are looking to purchase a home in Arizona and you do not have any money or a very limited amount of money and you are looking to purchase a home, this is exactly what you've been waiting for. I'm going to give you the ins and the outs of the fantastic program called the Home Plus Down Payment Assistance Program. Home Plus is legit. It has been around for a while. There are a ton of myths around down payment assistance. A lot of people think you need to be a first-time home buyer for it. Guess what? You do not have to be a first-time home buyer to take advantage of down payment assistance. It is eligible for anyone that meets this criteria. So I'm going to break down the criteria of what it takes to get qualified for this loan. But first, let's talk a little bit more about why down payment assistance is so cool and why it's so beneficial and can help you. There are some pros and cons to the assistance program as well. So I'm going to share with you all of that, because it's just good to get it all out of the way. But if you are truly wanting to purchase a home and the only thing holding you back is the money for the down payment itself, keep watching, because this is going to change your life. I promise you, you can use this to buy a home in Arizona tomorrow, today. Let's go. The Home Plus program, it's basically a state program here in Arizona. You can use the Home Plus program. It does have to be your primary residence, but there is options for both conventional loans, FHA, VA, and even USDA. So I know what you're thinking. VA and USDA are both zero down loans. Why would you need down payment assistance with that? Well, if you can't get a seller to cover your closing costs, this would be a fantastic way to utilize the VA loan or the USDA loan and still get free money that you can use to go towards your final closing costs or that total out-of-pocket number. So let's get into the good, the bad, the ugly. This program has options to where you can get either 2, 3, 4, or 5% of the loan amount in down payment assistance. So this is where it gets a little bit tricky and why it's good to have a loan officer that knows what they're doing. Because the percentage of your down payment, like for example on FHA where it's 3.5% down, that's based off the purchase price. So if it's a $400,000 purchase price, 3.5% of that is $14,000. What we do is after that $14,000 is taken out, we look at the loan amount, the percentage of your assistance is based off of that one. So that's why it's a little bit tricky, but again, I'm gonna share some examples of just what this looks like as far as money out of pocket, real examples, people that I'm helping today with this program get into homes with very little out of pocket. Now keep in mind for this program, there are a couple of caveats. There are two main requirements. Number one is credit score. The minimum credit score for this program is a 640. You do have to have a 640. It can't be a 639. It can't be a 638. It has to be 640 or higher. I just had this the other day though. So I had a client that applied for this loan and guess what? It was legitimately 639 when we pulled credit. But don't worry, I found a quick way to boost his score. In fact, 5 days later, after paying a very small amount towards his credit card, his score went up 40 points, up over 680. And now he is actually he's under contract now for a house with this program. Don't let the credit thing hold you back, because if you are a few points away or even 100 points away, I can share with you the tips and the tricks and everything that it's going to take to get that score to 640 so that you can qualify for this loan. The other cool thing about this program is they do allow manufactured housing, so manufactured homes or mobile homes, modular homes, however you want to say it. There are a few caveats though. So it does have to be at least a double wide if it's a manufactured, and the credit score requirement does go up a little bit. You have to have a 660 in order to use this program with a manufactured home. There's also income limitations, but they're actually not too bad. If you're making more than this and you still need down payment assistance, well, we might just need to sit down and talk about some of the things that you're budgeting and find you some extra money. Or I do have additional programs that do not have income limits, but for the Home Plus program, it does have an annual income requirement. This is not a household income. This is going to be for anybody that is applying for the loan itself. That number, or the maximum income allowed, $126,351 a year. So if you make less than $126,351 a year, you could potentially be eligible for this program. Now, how does it work? A lot of people ask, how does the assistance work? How do you get that money? Do you have to pay it back? Short answer is no. but possibly yes. I love how there's always maybes on these. The way that it works is that assistance, that whether you're getting the 2, 3, 4, 5%, however much of assistance you're getting, is given to you in a forgivable 3-year loan. That loan has no interest and no payment. It's going to be the only time I offer something like that, right? Which is pretty cool. Who wants a loan with no interest and no payment? This one is for the assistance portion directly. And the way that it works is it does slowly disappear. So as long as you live and stay in that property for 3 years, and do not refinance within that 3 years, you will never have to pay that assistance back. However, don't let that scare you. So I want to share an example. I actually helped my cousin do this. He bought a house, and again, timing was everything for this guy. And I got him into this down payment assistance program because, same thing, it was the only thing he could qualify for. He didn't have the money saved up for a down payment, which is totally fine. I know I said I was going to share pros and cons of the down payment assistance program. We've been talking a lot of pros. Get ready for your first con. The down payment assistance program interest rates are set by the program. I have zero control over the interest rates. I can't buy them down. You cannot buy the interest rate down on down payment assistance loans. And the interest rate is higher than the standard rate. So if you were just to go out and get a regular FHA loan, the FHA down payment assistance loan is going to have an interest rate anywhere between 0.5% to sometimes even a full percent higher. So you are paying a little bit higher of a premium on that interest rate in order to get those funds. But like I said, don't let that hold you back because there's a point to this whole story. So my cousin, when he bought it, it was same thing at a really high interest rate. Which creates a higher monthly payment, obviously, but he qualified for it. We did it. We got him in the house. Well, a year later, now keep in mind, he bought in 2020. So we all know what happened from 2020 to 2021 with home values. They just went boom. So because he had so much equity in the home and interest rates were around 3% at that time, we refinanced him, even though it had only been 1 year. We did have to pay back 2/3 of that assistance because, like I said, it's good for 3 years, but it slowly disappears. So if you had it for a year, you would still owe 2 of those 3 years left. But because he had so much equity in the property, we refinanced him, rolled those extra costs into the loan, paid off the down payment assistance, dropped his interest rate, I want to say, from like 6 to 3, and saved him like over $500 a month, dropped the mortgage insurance as well because we went from FHA to a conventional. Again, that's kind of a unique situation, but I throw that out there just to let you know there are options. Again, you don't have to stay there for 3 years. And in this case, it absolutely made sense to pay it off because it was going to save him over $500 a month on that monthly payment. So don't let the 3-year thing scare you because there are definitely options. So let's look at a real example, right? Let's talk real numbers because that's my favorite thing to do to show you how possible this really is. Because you also have to have the right real estate team in order to make this happen because of closing costs. I want to look at kind of a conservative scenario because right now the market is, at least when I'm filming this, is a little volatile. It's kind of going up and down. So what happens is the Home Plus program will sometimes remove their higher assistance programs. So I mentioned that they can go up to 5% assistance. I haven't seen the 5% assistance available for about a year, but the 2 and 3% are very consistently on there. I want to share an example about using that 3% program because this is something that I'm doing for a client right now. So it's very realistic. Take a $400,000 sales price. So the home is going to cost $400,000. We're going to assume they meet all the requirements for credit score and income and all that good stuff. The down payment on an FHA loan on $400K is going to be $14,000. But again, we're going to get 3% of that loan amount to help go towards that. So 3% of the loan amount in this case would be $11,782. So what we do is we subtract that $11,782 from $14,000, and that leaves us with $2,218. That would be how much money you would need to do for the down payment. So that would be your total down payment on a $400,000 home. Now keep in mind, there's still closing costs. I will say that the closing costs on this program are a touch higher than what we're used to seeing on the standard loan programs. Money that's free, there's a reason why it's free. The catch is interest rate's a little higher and the fees are a little bit higher. But again, this is a great opportunity to at least get you into that house if you do not have the funds to do it. So let's say for something like this, the closing costs are going to be around $10,000. You would need $10,000 for the closing costs and $2,218 for the down payment. So now we're talking $12,000, which if you think about it is still less than even the minimum down if you had no assistance at all. So even if the seller does not pay any of your closing costs, your total out of pocket between your portion of the down payment and all the closing costs is still less than just the down payment on a minimum down loan for FHA. But if you truly don't have that extra $10,000, if you really only have $22,18. If you've only got that much money, that's okay. Because this is where we can negotiate. We can request that the seller pay $10,000 worth of your closing costs to help offset that. So then you just have that down payment portion. And I'm gonna get a lot of naysayers on this because a lot of people think that sellers are not paying closing costs. That is not the case. Every single client that I have under contract right now has sellers paying closing costs. Anywhere from $3,500 to $25,000. You heard that right. I have a seller that contributed $25,000 towards the closing costs. That one was not a down payment assistance, so I won't get into that one, but I just want you to know that it is real and it is very possible with the right people. So that was a real life example of exactly how you can use this program to help get you into a better situation. Now, keep in mind these offerings kind of come and go, but this program is not going away anytime soon. I went to the Home Plus website just to see how things were going, and yeah, there's basically no sign of it being turned off or not having enough funds for this. So it's not like a time crunch or something you need to apply today to make sure you get this down payment assistance. It's going to be available for the foreseeable future. So now that you know that you don't need tons of money saved up to buy a home, and again, if you don't even have $2,200, that's okay. We can lower our sales price, that changes the percentages, or we can look at a higher assistance program. So for example, with FHA, the minimum down is 3.5%. You could get the 4% assistance program. That's gonna cover everything. That's gonna cover your entire down payment. Now keep in mind, that one is subject to availability. It's what's available at the time. But that one would cover absolutely everything you would need. So if you are looking to purchase a home and you are very tight on funds, don't be embarrassed. It's okay. I have that conversation with clients all the time. Like, tell me your budget. What do you have to work with total out of pocket? If you tell me you've only got $200 to work with, I will find a solution that works for that. And if it doesn't work, I'll tell you what you need to do and show you how we can save up, and we can get a little creative through other ideas on how to save money for that down payment or other sources that it could come from. But if this sounds like it would be something that would be a good fit for you, 640 credit score, make less than 126 grand and some change per year, this is an awesome opportunity to get you into a home. And I've been saying this for a long time, but this is the calm before the storm. Homes right now are sitting a little bit longer, but there are still not enough homes available for people to purchase. So that's what's causing home prices to continuously increase. And I think we're gonna see that for the foreseeable future. Because guess what happens when interest rates do drop? That creates more demand and more people that want to actually buy. So that's going to really hurt your options. If you do need seller concessions, if you need the sellers to pay for your closing costs, do not wait another year. Don't even wait 6 months. Start this process as soon as you can, because the days of the sellers giving seller concessions or them contributing and paying for your closing costs, I don't know how long those are going to be around. Down payment assistance is going to be around for a long time, but the seller contributing is a big key to that if you are truly, truly tight on funds. And guess what? This isn't the only down payment assistance program in Arizona. There's actually a few other ones. So if this one isn't quite the right fit, or maybe there is a better one where you get more money depending on where you're looking to purchase, that might be an option for you too. I look at everything when I do that loan consultation. If you come to me and you say you saw this video and you wanted to try it out, obviously we'll look at it, but I'm gonna look at all your other options too, because there might still be something better. But I'm a huge fan of this Home Plus down payment assistance program for that reason. It gives all that extra money so that you don't really have to worry about that. You don't have to scrape and scrounge and pull money out of your 401k or borrow it from your mom or your dad. This is money that you can use right away. So it's super cool. I'm a huge fan of this program. I believe it is here to help change people's lives, get you into homeownership, and get that ball rolling. And I want to throw out this one last thing. So as I mentioned before, this program is not it's not just for first-time home buyers. It's for anyone that's going to be living in a primary home. I know a hot topic right now. This one is only for existing homeowners, so it may not apply to everybody. For existing homeowners that have a home and it's at 2 or 3% and you don't want to sell it, but you're thinking about buying something else, this is a great opportunity where you can now get into rental properties and still use down payment assistance. This is a great opportunity where you can now become a landlord and start dipping your toes into the investment property world, start to make some real money. So what you can do, if you've got a killer interest rate on your current home right now, you can rent that sucker out, make sure you're collecting enough to pay for the current mortgage plus some. We can use that to help you qualify for this new loan. And if you don't have any money saved up for the down payment, guess what? You can use this program, even if you already own a home. So you can use this to get yourself into another home and turn your current one into a rental property. So I think that's one of the coolest things about this one. Again, even if that's not right now, if you don't own a home and you use this to get your first home, 3 years later, you can do the same thing. Rent that sucker out and go get another one with down payment assistance. I've helped so many people do that, and I think it's a great idea. It's a smart way to utilize other people's money to help get you into the real estate game and start making some money for yourself. So if you'd like to apply today, the link is right below in the description. And if you're not ready, that's okay too. Hit me up in the comments, ask me what questions or concerns you may have. And as a special gift, there's a link for a free first-time homebuyers guide. If you click on that, you plug in your email, I'll send it straight to you. It's got fantastic resources to help you get prepared and just have all the knowledge that you need so that you can become a homeowner. Thanks, guys.